Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome to the last trading day of December. It's expiration day on Friday. Everything is closed out here, so after the market, you either had to get out of your positions or they expired worthless in the money. You got exercise, whatever the case is. So just a quick update. As always, inside the membership area, we've updated the new expiration calendar for 2014. That's a really useful tool, and I use it all the time just to take a look at where we are in the cycle. And you can see that now 2014 January expiration for regular options is going to be the 17th, the third Friday in January. But keep in mind that we have 2 holidays during the month as well. So those are some really extra or great times for extra time decay. So if you're thinking about trades, you can kind of almost take 2 extra days off of January and February expiration cycles because of those holidays where we're not going to be trading. So again, use this feature in here. It's got the 2014 calendar updated. We always update it each year at the end of the year. So now that we're past December, we've updated the January one for 2014. So let's go to some of the trades that we made today. The only opening trade that we had here today was this vertical spread on the Qs. And we bought the 86.87 call spread for 57 cents as far as the debit per spread. So again, these are always per spread. I get questions on this a lot, but it's always per spread, not total for all 4 contracts. But the reason that we again bought a vertical call spread, just like we did with the SPYs yesterday, is that we're trying to add some longs to the portfolio. Now, December through January typically tends to be kind of this Christmas rally, this holiday rally season. So we don't want to get caught here with our pants down and not have any longs on. Not that we don't already, but we want to just really bolster up this long side of the portfolio. Again, it's a 50-50 bet with the Qs and the SPY. Our SPY trade is already making great money. It's a couple $100 already winner. So the Qs we just added here today, it seems like the Qs seem to be a little bit more of a lagger when you compare them to the DIA, the Dow, the Diamond. So this is the Qs. You can see we're just starting to break into new high territory versus the Diamonds have really been on a tear since then. So some of the other ones, the IWM, etc., again, starting to come up towards this new high territory that we're getting close to at the end of the year. So thought the Qs were a good trade for today. All right, so let's go through the closing adjusting trades that we had. Since it's expiration day, some of these trades here aren't actually closing orders, but orders that expired worthless. So we always wanted to show you guys these as members because sometimes we don't send out an alert to close a trade. It just expires worthless at the end of the cycle. And that's exactly what happened with these 3 trades down here. So I'll go through all of these here and then we'll go to some of the charts here at the end. But the main ones that we closed out here today was that we bought back the vertical spread that we had on the DOW. Again, DOW Dow has had really, really high implied volatility. And even though these are January contracts, they are already trading for 7 cents as far as the debit. So we bought this 39.38 put spread back. Nice little $14 profit. If you remember, the only reason that we entered this trade for around 21 cents in credit was because we already had a call spread on in the Dow. So it was kind of free money that we took in, and we're just locking in a nice little profit here. The USO trade that we exited today was actually a December contract, so we kind of tried to wait as long as we could for USO, but we ended up selling back the vertical 35.37 call spread for 40 cents in credit. It was a $67 loss per spread that we ordered. So again, if we go to the chart of USO, really what we were trying to do is take advantage of possibly a move up in oil, and it just quite didn't make it as far as we would have liked it to make by December expiration. So we kind of tried to wait as long as we could, and we had these last 2 days where it was really, really close and kind of trading a little bit higher, but really just didn't make it where we needed it to go. So we closed out the trade, saved some of that premium without losing everything at the end of the day. The other trades that we had here that expired worthless, these 3 trades, are vertical put spread in EWW. That expired completely worthless, so that was a nice $50 profit across the board. Our FDX vertical put spread as well. If you remember, just the other day we closed out the call spread before the market continued to rally, locked in a nice little profit. This was the put side of the trade, or of the iron condor that we had on FDX. So we kind of legged out of this FDX iron condor. We closed out of the call spread earlier this week, and now at the end of expiration, we let this put spread expire worthless. That was a nice $76 profit. And then LinkedIn, this was a great trade as well. I wish I would have done many, many more contracts in this trade, but the December 200, 195 put spread, a very wide put spread, but we took in $100 in profit per spread there. So really, really nice trade on LinkedIn as well. LinkedIn continued to move higher, had it kind of come down here in the last couple days, but it didn't hit our strikes. And that's only because we had really great implied volatility when we entered this trade in the beginning. So that gave us that extra breathing room to move forward. So hopefully you guys like these videos. As always, please add your questions or comments below. Really great month of December. We'll start adding more and more positions to January to what we already have. And happy trading.